Welcome back to the bunker. I'm your host, Jason, and I just wanted to go over one specific trade with you guys tonight. The feedback I've been getting is the portfolio overviews are really nice, but the specifics of individual trades would be more beneficial to the folks in our community. So we're going to go over one specific tonight to start with. How about that? All right, let's get to it. This is the key, my friends, to trading 101. Now this is not advice, not financial advice. This is for entertainment, but I'm more entertained by making the correct assessment than the wrong one. So hopefully this will entertain you as well. I took 3 contracts. I sold calls as opposed to my normal strategy of puts because we had seen this market top out a little bit, and we were just seeing a pullback back to as you can see in the IWM specifically is one we're going to talk about. We pull back to an area of resistance, almost to the point of actually closing this gap here that we set in April 16th. We've kind of closed it once before, and we come back and retested it, and the whole market pulled back there. And this gold line right here is the previous all-time high. So we come back and we tested that. Now, 9 times, well, I'm not going to give statistics. And all the truth is, when we look at this chart, what type of spread, if we were going to put a spread on, should we have made here? I made the exact opposite of the one we should have. I should have made a risk at this support area right here on the 19th, which is where I made the trade specifically. I sold a call way up here. Well, right about there. Not even where we had resistance the last time. It was kind of pretty close to that one. Was it a little bit below this resistance here, which we would have been good on the 20th when it expired. But I tried to make a quick buck overnight and went the wrong direction. I should have been selling a put spread down here at our support level, not a call spread right into where we came into support. Because the odds are we're going to see some sort of bounce, even if it was only for one day. Just like this when we hit resistance up here one day, we come back and retested it again. Same concept going the other direction. We pulled back into a support area that we've been tested a couple times, or at least one time. We're coming back and retesting it. Watching this day's action when I put this trade on, and I put it on in the afternoon of all things, right there. We've already seen that it bounced and was coming back up. I should have seen that. I should have looked at this chart a little better. And I went ahead and put on a call thinking we would break that and come back down and maybe test a lower level. I've got this on a 2-day, one day. So, there's no guarantees, first of all. But there were a lot of evidence at this point to where this was a previous all-time high. We come back and tested it again. Maybe we should not put that kind of risk on at that time. Maybe it would have been better to put that kind of risk on at when we were at all-time highs and tested it and rejected it and came back again. This is where we should have put the call spread on, most likely. Least risk, more reward. When you get down here to this support level, you've got to think more like a contrarian than you've got to think of. You want to be a buyer here, not a seller, because we've already sold off this much. This is where they bought the last time. This time here, and they bought it this time here. Sometimes you've got to trust that there's a big guy, a big fish out there gobbling up shares at this price, and that's exactly what happened. It doesn't always work that way, but it would be I think would be more successful in the long run. And my trading history for this year for sure, or my last 10 years, has proven this fact as the odds are in our favor much more to see some kind of support at a support level and some kind of resistance at a resistance level than to go ahead and make the complete rookie trade here where I went exactly opposite of what I should have done. And that specifically should be the learning point of this video here is if you're going to take risk when the odds are more in your favor of seeing something. And also the second part of what I did on this trade is I risked more than what I normally would. I bought 3 contracts and I should have only just done 1. So I was already uncomfortable with the risk. My risk is supposed to be around 130 per trade, and as you can see on this trade specifically, I lost 600 altogether. So now for IWM trades, I am negative for the year of $476. That's all on me. I made that mistake. That I went against my technical trading background and made a mistake, and I paid for it. So maybe someone out there can learn from my mistake and learn that the odds are more in your favor when we get to support to see some kind of bounce rather than to jump on the bandwagon and think it's going down further. Same thing with the upside. The odds are, as we come into here, you're going to see some kind of rejection a little bit, and then we'll see if support steps in. A lot of times, it's one of these EMAs. Like this is the 9 EMA. This is the 20. I believe the gold one is the 20 EMA right there. Yeah, this yellow line. And this bottom one is part of my ENA channel to show that we're still bullish overall. That's what that channel is there for, that green channel, to show that we're between the 9 and the 12. We are still following through and moving in a bullish direction. It's just a quick check for me. But as you can see, the SMA, the 20 SMA, which is this yellow line, has catching up. We broke back above it. So most likely coming into tomorrow after a 3-day weekend, we could probably see a rejection up here and maybe some kind of bounce at this 20 if we don't move all the way down. We'll see. But anyway, I hope this has helped. If you'd like to, I'll go over some of my positions as just to wrap up this video. It's more about that. As you can see, we were up $1,000, and that $600 took a big chunk of my annual profits. That definitely hurt, but we're still positive. Not as much as we were, obviously, but we're still progressing, getting back on my strategy. Intel is going to bounce up today. It looks like overnight. We kind of see some action here. Gets me around where I have my shares on, and I've got a short put at the 100. So we're back 120. That most likely is going to come close to getting our 50% tomorrow, and we'll close out of that one for about a $200 winner. That's always great. We got about 21 days as we management, so it should be pretty close to milking at least 50% out of that put. Oh, oops. Let's see. That's that one. This one we'll have to manage this week as well. It's our Palantir put spread. And let's see, what's our extrinsic value? We're milking this extrinsic as much as we can. We're at 135 or 136. So there's still $500, even though there's 20 days on this one. There's still $500 we can pull out of this one before we have to roll it. We're up 200 so far. So most likely by Friday we might have to roll this part of our this spread out in the future. We'll see that later in this week. Airbnb, this one is the other side of our wheel strategy. It's working so far. We went and, like I said, we're out in December. We bought a call and we're selling credit spreads against that one. That will expire in 4 days. And we've only got $25 of extrinsic value left to steal out of this one. This one's pretty good. So like I said, we're at 82 on this one. This one we might go ahead and roll out till next week, at least this side of it. 80 is about what we're trying to collect, and so we may roll that one out if we don't get over 140 by that week, and then we close both sides of it. So that one's working out pretty good. We're going to milk that one for a little while. Same thing with our KMB. We're on the other side of our strategy, so we went out in time and bought our call, and that actually is positive. So this one's probably all over our short, above our short, 96, and yeah, we're looking at around 100. So this one kind of looks like a loss, but really what we were trying to do is grab as much of this extrinsic value as we could when we sold it, and so we've only got 27 left. It kind of looks like a loss, but we collected what we sold that one for. If we go over to our Allison chains, well, we can't see the individual part of it. We may have to go to our trades. What is that? KMB. So if we go to history and do KMB, you can see that we bought the long call and we sold that for $253. So that's ours to keep right there. They just made this cheaper, so it looks like two, but we're gonna suck up that extrinsic value right there, and then we'll roll it out, or depending. This is almost made up. Like, see, that's why we're positive on the position. You can see that the value of our call out in the future is worth more than the intrinsic value, or the extrinsic value that we absorbed, so that these would cancel out. So we should be in a positive position by the end of this week. Now we could do one of two things. We could take and roll this call up. We could do these two. We could roll that call out into the future and roll it up as well and collect more premium against our future call, thinking it's going to continue to move up. And the only reason we're in this position is the fact that it is one of the stocks that we wouldn't mind owning that has a has just as of late shown a positive order flow, and you see we're kind of trading sideways right now, so it might not be a bad idea to go ahead and roll that short strike out and up and collect more premium against our position, since we're up on that one. So we'll come back to that one later in the week. We've done those. Walmart is another side of, so we had a really rough week last week. Walmart flipped on us after earnings, and now we're on the other side of our wheel strategy on this one as well. We went out in the future, and like I said, I wouldn't mind owning this one at 97 for sure. But we've seen a little bit of a bounce now. What are we at? 120. But our short call is 122, so we're trying to capture as much of that extrinsic value as we can, and we've got plenty of time on this one. 53 days. We don't have dividends until 87, so we'll just ride that one out, try to collect as much of that premium, and hopefully we'll see this call appreciate in value. If not, we're going to get to own that thing at 97, which won't be bad. Won't be bad at all. So that's in the money. All right, Tilray, I'm not even going to talk about that pain in the butt. EUV, this is our software, I believe. Yeah, semiconductor ETF play. It looks like we ticked a little bit over 27, so we're kind of in the positive direction on this one. We'll maybe ride this one out. We're looking at adding, let's see if we go to our daily on this one. We'll look at adding, let's see, this must be a relatively new ETF. Look at that, for a year. We've only been in this one for, is that how, this is a relatively new ETF. I didn't know that. Oh, so we don't have much to go on. We don't even have enough data to have an average true range on this one. Wow. So this one we're getting in early on it, so to speak, even though most of the semiconductors are at all-time highs, but most of them have already reported earnings, so the fluctuations of that one might be too bad. NVIDIA, This one is pulled back. Hopefully, we'll get to see some kind of bounce on this one. I have just 8 shares of this one, and I've got I've set my stop loss. As far as my profit target, I think our max position would be probably 12 stocks on 12 shares on this one. We're already at 8. We'll look at adding to this one if we get over our ATR, which is 8. So we would add more at about 230. 230. That's what we're looking for, to be able to add to this position one time, and then of course it would be 238 for us to add a second time. Oh, we'll watch that one. IGV, this one is our software sector. We've seen a little bit of bounce in the software sector. Actually, we're doing pretty good on this one. Let's look and see where my profit target is. Maybe move that out. And let's look. We're trailing this one by our normal. We're already in max position. And normally the turtle traders, which is kind of the strategy I try to follow when I'm in a long-term position and full position, is our 10-day moving average, or 10-day low, which is right here, and we're already at that for our stop. So some people would already bring that up to break even. It'll be break even maybe tomorrow. We'll see where it opens up. And then this is my bank, of course, where all my profits for the year. I have bought shares in this one, in this ETF, and they do the wheel strategies specifically in different products. You can go to their website and check this one out if you like. But when I have collected profits, they're all in here essentially. So the rest of what I'm trading is what is available to me, and then I will get dividends quarterly on this one. So anyway, that's kind of my overview, but specifically I wanted to go over that one trade with you because people would like to know what it's like in the thought processes between how to manage a position rather than just an update on how I'm doing it. So I'm going to try to pivot to that more for the community. And if you have any other questions or comments or other stock ideas you'd like me to evaluate, just leave them in the comments and let me know. I'd be glad to help. And if you'd like to know more about how I choose stocks to trade, check out this video right here and it'll definitely help you out. Take care now. Bye-bye.